Axis long-term equity fund. Will this equity-linked savings scheme adds more return to your portfolio or adds more risk to your portfolio? What kind of tax benefit this can bring additionally to you? Let us analyze in this video. Hi, this is Ramalingam from holisticinvestment.in. We help individual investors like you to take a right financial decision so that you can reach your financial goals faster and smarter. Before we go into the analysis of this particular fund, let us analyze this particular category, ELSS. ELSS means equity linked savings scheme. That means this fund will have a 3-year lock-in period and will give you benefit under section 80C. Up to 1.5 lakhs you can invest for section 80C tax saving benefit along with other section 80C benefits. This fund, just like a flexi cap fund, can invest in small, mid and large cap stocks. There is no restriction on how much to be invested in small cap, how much to be invested in mid cap, how much to be invested in large cap. And the fund manager can also dynamically move the allocation weightage from large cap to mid cap to small cap based on the outlook. This fund is suitable for someone who is looking for section 80C benefit and also who has got higher risk appetite. As this fund is going to invest predominantly in equity only, better to have a time frame of 5 to 7 years. Though this fund is having an inbuilt lock-in of only 3 years, you as an investor invest with a mindset of 5 to 7 years time frame, so that end of 7 years you will have inflation beating returns in your portfolio. Investment strategy, simple. Their objective is to generate long-term capital appreciation. In the short run, being an equity fund, we cannot surely tell you this fund will give you positive return. Short run, this fund has got the potential to deliver negative return also. We have understood the ELSS category in detail. What is the basis by which we are going to analyze this particular fund? In the first segment, we will see few basic attributes of the fund. Then we will look at the return analysis of this fund. We will analyze the return from multiple perspectives and we will have an assessment on the return. Then we will assess the risk. That is the third segment. Here we will understand the risk from 360-degree perspective. Finally, we have some key observation about this fund, and also we have some important points to be considered if you are planning to invest in this fund. Can we go ahead? Okay. What are the key attributes of the fund? The minimum investment in this fund is just 500 rupees. Even if you are doing an SIP, even then the minimum investment is just 500. Benchmark index is Nifty 500. This fund has got a long history of close to 12 years. The fund is available since 2009. It is an open-ended category. That means anytime you can enter. Because of the 3-year lock-in, you will be able to withdraw anytime after 3 years. The assets under management is, as of June 2022, it is 27,628 crores. The expense ratio is 1.55%. Risk grade is average, return grade is above average. Fund manager is Jinesh Gobani. The portfolio turnover of this fund is 23%. 23% is a reasonable portfolio turnover ratio. That means the fund manager will have 23% of churn in the portfolio. Rest of the portfolio, the fund manager will hold it for the long term. This assures that the fund manager is believing in long-term investing and he is not simply focusing on momentum investing. He is not simply believing on chasing the trend. He is predominantly focusing on buy and hold. Total stocks held in this portfolio is 41. Generally, ELSS category on an average has got 47 stocks. So this fund has got almost similar range. 47 is the category average. Total stocks held is 41. It is relatively less. Large cap to the extent of 63.92% is invested in large cap, 17.35% is invested in mid cap, 3.63% is invested in small cap, and balance in other assets. Total works out to like 100% will be predominantly invested in equity. And what are the top 10 holdings of this particular fund? Bajaj Finance, Avenue Supermarkets, Tata Consultancy Services, Kotak Mahindra, Info Edge, Nestle India, HDFC, Divi's Laboratories, Pidilite, Torrent Power. These are all the top 10 holdings. Top 10 stocks has the weightage of 62.54%. Remaining 38% is invested across 31 stocks. That means in the top 10 stocks, this particular fund has got higher concentration. Concentration can bring more return. Also, it can add more risk to your portfolio. We should be cognizant of that fact. What are all the top sectors? Top 3 sectors are financial services, then services, technology, chemicals. These are the top 4 sectors. Top 3 sector weightage is 48.59%. Again, top 3 sectoral allocation is also concentrated allocation here. As I told you, concentration can add more return as well as more risk. Exit load, there is no exit load, I would say, because like being an ELSS fund, you will be able to withdraw only after 3 years. And short-term capital gain, if you are withdrawing before 1 year, it is 15%. But however, you will not be able to withdraw within 1 year time frame. So there is no short-term capital gain will be applicable in this fund. Long-term capital gain, just like other equity funds, when you withdraw after 1 year, especially in this fund, you will be able to withdraw only after 3 years. So whatever the gain is there will be 10% long-term capital gain tax. Again, in the long-term capital gain tax, there will be 1 lakh exemption. Over and above 1 lakh capital gain, additional money will be taxed at 10%, additional profit, additional gain. Now is the time to actually focus on the return analysis, which is the second segment. We have completely understood the key attributes of the fund. Now is the time to do analysis on the return. Let us analyze return from the multiple perspective. Let us compare this fund's performance with its benchmark index. Nifty 500 total return index is a very broad-based index. It is difficult to outbeat this index in general because it is totally 500 stocks. It's difficult to outbeat this particular index, but there are funds which are able to outbeat this particular fund. Axis long-term equity in the 10-year category, exceptionally they have outperformed this index by 3%. 3% outbeating the index for 10 years. Right, 10 years with additional 3% is definitely a remarkable achievement, I would say. In the long-term compounding effect, that additional 3% will add a huge sum of money in your portfolio. Rank within the category. In the 10-year category, this fund is reasonably good. I would say very good because number 3 out of the total 26 funds. And also in 7-year and 5-year category also they are good, 14 and 12th rank. The last 3 year and 1 year is too short term to judge the performance of this particular fund. One thing that we have to understand about ELSS is actively we cannot move out of an equity ELSS fund because it's not performing. So here we have to give additional weightage for consistent performance. Access long-term equity instead of focusing on the short-term performance. If you focus on the long-term performance, it will be good because predominantly for ELSS, give additional weightage to long-term performance. Don't give much weightage to short-term performance because the recency bias can give negative impact to your investment decision, especially in mutual fund ELSS scheme selection. Then another important analysis which we do in our review is rolling return analysis. Instead of simply looking at the point-to-point returns, looking at rolling return will give you much in-depth analysis and insight. Here, there are many data. I want you to focus on one particular data, which is maximum and minimum column. In one particular 1 year category, this fund has delivered 86% in 1 year. In another 1 year category, this fund has delivered a negative 18%. In 3 year category, this fund in a best case scenario has delivered 38%. In a worst case scenario, it has delivered 0.6%. In a 5 year category, in a best case scenario, this fund has delivered 27.90%. And in a worst case scenario, it has delivered a 2.10% return. So this is what I meant by consistency. If you look at the other review videos in 3 year category, this most of the funds have not delivered positive returns. Whereas this fund has delivered, even within 3 years, this fund has delivered positive returns. Even in mutual fund ELSS, the lock-in period is 3 years time frame. So consistent performance is the key. And in 5 year category, this fund has delivered 2.10% as the worst case scenario. 10 year category, obviously this fund has delivered above average return, inflation beating return, even in the minimum category. Even in a worst case scenario, the fund has delivered a 12.51% return. In a best case scenario, the fund has delivered 21.06%. Though the lock-in period is just 3 years, I would suggest you invest with the mindset of 7 year plus. Then that way you can be rest assured of beating inflation and generating above average return. This is best quarter and worst quarter analysis. You will see very interesting data here. In one of the best quarters, what kind of return this fund has delivered is 25.94%. In one of the worst quarters, this fund has delivered minus 21.78%. This actually gives a very clear indication that in one particular quarter, it can give you very good jump. Also in one particular quarter, it can give you a huge fall in your portfolio. Being an equity fund, these ups and downs are very common. As an investor, without understanding the volatility impact of equity, if you choose Axis long-term equity fund just for its past performance or just for tax saving purpose, then you are misguided actually. You have to understand the volatility. You should have enough conviction on its long-term performance. That conviction will give you enough patience to stay the course for 7 years or more. So that way, understand this can give you huge positive returns in the short run, huge negative returns also in the short run. You should have enough conviction and patience to stay the course for 7 years plus. 1 lakh invested 7 years ago in this fund would have resulted into 1,99,000. If someone is doing an SIP of 10,000 rupees every month, then the present value would have been 12,15,000. Both in lump sum category as well as in equity category, SIP category, this fund has delivered very good return for 7 years period. Though this fund has delivered reasonably good returns in a 7 year period, even for lump sum investment, I would strongly suggest you to consider only monthly SIP, because monthly SIP can give you rupee cost averaging. Right? You will be staggering your investments throughout, and it will take advantage of the market ups and downs. Axis long-term equity, one good advantage is it has got an expense ratio which is much lower compared to the other top ELSS funds. And total EAM is also huge compared to other ELSS funds. Though in few categories, 1 year, 3 year, 5 year category, there are other tax saving funds which has delivered higher return than this. This fund seems to be a very consistent performer in the long run. We have come to the end of the second segment, which is return analysis. We have analyzed return from multiple perspectives. Now is the time to analyze risk. As an investor, you should not simply focus only on return. You have to pay enough attention to the risk, because risk management is under your control. Return management is not under your control. Only by managing risk, you will be able to control return. That way, let us analyze risk of this particular fund using multiple statistical tools. We will use few traditional tools. We will also use few unique tools here. According to the Risko Meter provided by SEBI, this fund comes under a very high risk category. This fund is suitable for very aggressive investor who is willing to accept very high risks to maximize potential returns over the long term. Being an equity fund, it is definitely a very high risk and aggressive. And key ratios, traditional ratios, standard deviation is 21.49, Sharpe ratio is 0.32, Sortino ratio is 0.39, and beta is 0.9. And the alpha is minus 3.54. So if you look at it, this fund has got a higher volatility. Also, this fund takes highly like similar risk compared to the index. And alpha, yes, minus 3.54% in the last 3 years. However, in the long term, as we have seen in the earlier slides during return analysis, this fund has delivered 3% additional return than the respective benchmark index. Being an ELSS fund, giving more weightage to long-term performance is more important actually. Downside volatility in the last 5 year and 10 year, they are not very good. In fact, they are in the top quartile. That means they are taking higher downside risk. Let me explain what is downside volatility. Generally, when we measure volatility, they measure volatility as a wholesome volatility. When the market goes up by 10%, the fund also goes up by 15%. That additional 5% return they have delivered, but that will be captured as volatility, right? But we are not worried about that volatility which is giving us additional return. We are worried only when the market goes down by 10%, but our fund gives 15% negative return. That additional 5% negative return is definitely a bad volatility, right? That way, we have categorized all ELSS funds, and top 25% of the funds which has got a high bad volatility score, that will be categorized in the top quartile. Next 25% is in the upper middle quartile. Next 25% is in lower middle quartile. Next 25%, that is the funds which has got very minimum bad volatility, will be classified under bottom quartile. That way, this fund in the last 3 years, they were able to minimize downside risk. However, in 5 year and 10 year category, their downside risk protection seems to be very weak. Capture ratio for this fund is also very poor in the 1 year, and the 3 year and 5 year category, they are close to number 1. But in 10 year category, they are extremely good. They are more than 1. So that way, again, long-term consistent performance have to be given more weightage in ELSS mutual fund category. General outlook of this particular fund is, though this fund can invest in large, mid and small, this fund seems to be having higher weightage to large cap. That way we can say among the equity fund category, this is conservative because they are giving more weightage to highly large cap. And fund has given a negative return in the last 1 year. However, short-term performance, we should not give more weightage. Long-term performance, we have to give more weightage. Fund manager is managing the fund since 2011. So there is a strong fund manager holding. The company is also able to retain the fund manager. Fund manager is also sticking to the company. So long-term association of the fund manager really helps. If you want to invest in this fund, please keep a couple of things in your mind. Though the lock-in period is 3 years, I would suggest you to invest with the mindset of 7 year plus. Also, when we are selecting funds, in addition to whatever the quantitative analysis we have done, you also have to do few qualitative analysis, like the ability of the mutual fund company to retain the fund manager, the investment process created by the company, what kind of institutionalized investment process they have, or the investment process is created and customized by the fund manager. Do they consistently follow their own investment philosophy, or they get tempted because of the market climate and they change their strategy? So all these things are qualitative parameters that has to be measured, given weightage in selecting the funds. Also, it is better to have a consultation with your financial planner before choosing these kind of investments, because your financial planner will be having your financial roadmap. He knows where are you financially with your assets and liabilities, what are your milestones on your roadmap, like buying property, kids education, kids marriage, your wedding, all milestones, and what kind of cash flow you have on your roadmap. So as he has your cash flow and all the goals on the roadmap, based on your investment objective, financial goals, whether this particular investment is suitable to you or not. Also, he would have done a risk profiling assessment. As an investor, what kind of risk potential, risk profile you have got, risk appetite you have got. Based on that, this fund is suitable to you or not. And one more thing, you can also ask your financial planner is, because you are adding this new fund to your portfolio, to the existing mutual fund equity investments and the existing equity portfolio you have got, what kind of overlap this is going to bring, or what kind of unique diversification this is going to bring. Whether this overlap or unique diversification is going to help your portfolio or going to hurt your portfolio in the long run, that you have to check up with your financial planner. Hope you have got a 360-degree analysis on this Axis long-term equity fund. If you want to participate in our regular investment webinars, yes, we organize insightful, enlightening investment webinars with investment experts regularly. These investment experts share their unique investment strategies and long-term wealth creation techniques. You can discover those techniques and strategies and immediately apply to your portfolio. So I have given a link below this video in the description. You can click that link and leave your name and email ID. We will book the seat for the next webinar and send you the invite. If you have any questions on this particular fund or any other investment options or achieving your financial goals, feel free to book a free appointment with our certified financial planner. Again, I have given one more link below this video in the description. You can click that link and book your seat for the next available slot with our certified financial planner and have a healthy discussion on creating your long-term wealth. Hope you like this video. I'll again meet you in yet another useful video. Thank you. Bye-bye.